Hey guys, it is Mark Coe for the 2nd of May. FOMC day today here in the United States. I wanted to take a look at a couple markets, and the reason I think this is so interesting, I talk about levels all the time. It's what I focus on, it's what I teach, it's what I do in my room. But the reason I found it so interesting today is because it really illustrates the point that I try to make, which is deal with what you know, deal with objective, and everything else to me is really just noise. It's my style of trading, my approach, my philosophy, but I find it works really well for people. And the short-term mentality that I try to focus on is to say, look, take that headline mentality out of play and understand what is it you can really focus on. You can focus on levels. So let me look at E-minis today. This is what we had coming into the E-minis today. You had a bottom edge that we've been focused on, taking it down for anywhere from 26.10 to about 26.20 would have really captured the bottom edge. So that really did not come into play today. May come into play tomorrow and Thursday, may come into play Friday, and we'll be aware of it. But ultimately, we did have a zone here today that came into play. And it was a shorter term. It was only coming from earlier this week. But it was top edge action, and it was top edge into late afternoon U.S. trading. It was not what I would call the biggest level in the world, but understand you're not going to get presented with long-term big outside edges every day of the week, every minute of the day. It's just simply not going to happen. But what you are able to focus in on is what the level that's presented to you then and what matters. So this is kind of into the FOMC. And you can see where the edge was put in on, Tuesday afternoon, right? The highs, 58, touched again overnight. And same level comes into play at the FOMC announcement and ultimately what became nothing, but you still saw reaction off of it. So here's the point I'm trying to make. We have a couple other tools we're using in this, timing, which would give us some bias. But ultimately, the level is what ends up holding. And so the idea would have been looking sell side into a level. And again, on the opposite side of a level, looking at buy side. But until that happens, respecting the level. Now I want to show you something else in crude, because crude is a market, crude oil, or on the June contract here. Crude is a market that gets looked at and gets talked about a lot in our room. We have a lot of crude traders. So the mentality with crude lately has been that people have been looking at it and, I think this bottom edge is going to break. I think we're going to get through 67. And I'll show you ultimately how I've been dealing with crude. Crude has been traded as basically a very tight $2 range for the last couple weeks, but the bottom edge has held and held and held. So the mentality, the approach I'm using is not to guess whether or not a level is going to hold. It's to respect that level and understand what's going on as it trades into it, right? So the idea in crude oil has been cover shorts, look for longs within that zone. And that zone, which was again created early to mid-April, tested again late April, tested again late April, tested again late April. Using that same approach, that same zone has given trade opportunity after trade opportunity after trade opportunity. The difference is if you're walking in, looking at a headline and saying, I like something shorter, I like it long, ultimately the opportunity is missed. If you're starting to understand the level from the standpoint of buyers have come in and support this level. I mean, that's what it is after all. It is support. The difference in the way I'm doing it is that I'm using a bigger picture walk down of this zone. And then ultimately for the short-term trader, you're able to really dial in on zones where, again, it's the market that has showed you it will react. Yesterday, we got a move below 67. Could never close down there. Retested again today. The point is, there are some really tight risk areas where you can risk less, stand to be rewarded more, and that's the idea of trading. So those opportunities continue to present themselves, but I thought today was a really good day to look at it from the standpoint of not opinion-based, right? That's what's very different about my approach, is that I'm not using opinions. I'm using very objective approach, which is to say, this is the level that has been defended or supported in the market, and that's what I'm reacting to. That's what I'm using, right? Some will differ with their approach. Some will say, well, you need to look at a headline. And I will say, no, for my approach, I don't care about the latest headline. It will get reflected in the price. And so really the difference I'm focused on is to say, until that level is broken, I'm using it, right? And so the timing aspect of it just simply helps to put that bias into place and say, this is the way I would like to deal with it now. It's the bias and it's the level. So anyway, hope you guys had a good Wednesday. We do have non-farm coming up Friday here in the U.S., and equities are certainly on a weaker foot walking into Thursday evening trade. Our daily model has a limit order to sell equities on any rally, and we'll see if that gets filled. It's the only active order in the daily model right now, but I hope you guys had a great day, and we'll chat with you soon. Cheers.